Hello, everybody. I'm Toby Gennaro, and looks like I had a good crowd on today. So let's do a sound check as we normally do, and make sure the sound's coming across loud and clear. You guys can see the current splash screen. It says live technical analysis. Actually, April 24th. A little typo there, but nonetheless, we'll get through it and talk through a couple of charts here today as we have planned, and get some Q&A going with you folks out there, and see what we can help you with in terms of technical analysis on some of these markets. So you guys have already responded. Looks like the sound's good and everything's coming across loud and clear. So we'll jump right in here. I'll do a formal introduction for recording purposes, and then we'll get going. So hello, everybody, and welcome. I am Toby Gennaro, and I'll be your presenter for today. The topic for today is live trading with Nadex contracts. So I'm just going to be talking through a series of specific trade setups in real time that I'm seeing in the markets technically. Now, for those of you that are on the live webinar, if you have questions during the session, you can type those into the question box on your screen. I'll be asking you guys some questions as well. So the whole idea of today's session is really to be interactive and kind of walk through some charts, help you understand the trade setups that we're teaching in the advanced strategy course, and hopefully enable you to get keyed into some of the other webinars that we're teaching here on this segment, and do it that way. Just by way of formality, I need to put up the risk warning and disclaimer as we normally do. I'll leave this up for about 30 seconds or so. If you guys could just have a quick read through, that would be good. In brief, we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. Okay, everybody good with that? And just one more disclaimer here from Nadex, and that'll wrap up the disclaimers. If you guys can just have a quick read through this, it's a short one, and then we'll get started on the agenda and the content. Okay, very good. Let's get started here. Now, to kickstart your trading every Tuesday morning, you can utilize this regular feature from the trading team at Trade with Precision. With so much going on in the markets each week, the big question is, how can we spot opportunities across multiple markets and multiple time frames? So you can join us weekly for this very insightful live webinar, where we will be focusing on technical analysis, trend analysis across a number of major markets to help identify and answer this particular question. So let's go ahead, jump into the live charts, see what kind of trading opportunities we can find for today, and then begin some discussion around that. So what I did before initially coming on, as I normally do, took a look at a few charts that I thought would be good to consider for potential trading opportunities today. I've got the EURUSD, and then they'll take a look at gold, as the markets are, the equities markets are, bouncing around quite a bit. Gold is going to be the safe haven for any downtrend that might begin in the equities markets if we start to trail off on the uptrend. But for right now, we'll head over to the charts and take a look at. Let's see. Let me get my chart set up here. And I'm going to be using some charts here where we can actually look at multiple time frames at a single glance. Nadex has done a great job of putting together some charts on their platform as well, which is actually the indicative pricing, which is an average pricing, pretty close to the underlying futures price. But for the most part, it actually determines, what the contracts for binaries are going to pay out. That's going to be based on the average indicative price that's on the Nadex charts. So we can go to those a little bit later, but we will be looking at the contracts today based on, any trading opportunities or setups that we might find in the price action by going through some of these charts here. So as I go through these, if you guys have questions about anything, just feel free to key those into the question box on your screen, and then I can respond to those, and then we'll kind of do it that way. So looking here, I want to go through two products here. I want to go through the euro dollar, and I want to take a look at gold. So we're on the euro dollar charts right here, and I always like to go through this stuff, as you guys know, on the monthly chart, the weekly, and then kind of work my way down through to the smaller time frames. And so, with the Nadex contracts, the binaries or the spreads, there are, or at least the binaries, there are weekly contracts, which are going to be the longest term contracts that you have to choose from. And then it'll go down through the daily, and then some of the hourly contracts, all the way down to like 20 minute and then 5-minute contracts as well. So depending on what market you're in. But for today's purposes, let's take a look at the charts. First, I want to identify if a chart is worth trading. And then if we can find something, then I want to take a look at the contracts to see, to see what's available to leverage and take advantage of that trade. If I don't find anything setting up in the charts technically, like we're looking at right now, there's quite frankly no reason to look at the Nadex contracts, because I don't have a valid trading opportunity with which to engage the markets. So at that point, I just need to wait and be patient and continue to look for opportunities. And when I do find one, then all of a sudden, more than likely, there will be a number of Nadex binary contracts to take advantage of, to potentially leverage that move that I'm seeing in the markets. So here, we've looked at this one a number of times in the past, and as you can see on the monthly chart, I like to look at the higher time frames because it really gives me an idea of really kind of where we're at long term and where the markets might be headed. Now, as you can see, we had a cliff fall off right here in the last, roughly since what, 2014. If you've been tracking the euro dollar, a consolidation here for really almost the last 2 years before we created quite a bit of strong bullish divergence, got a bounce off of that low. And then we've bounced all the way back up into that sweet spot zone on the Fibonacci retracement, right around 62% and the 50%. You can see how precise those levels are, because we bounced up into that 62% retracement level. There was some other old price resistance way back from 2011, 12, and 13 that kind of came into play there as well. And we've been in a consolidation there pretty tight for about 4 months now. And so in looking at that, typically the markets will pull back off of these levels, and they might do a 50% retracement, like down around this level here into that maybe 113 range. And then from there, if the market's going to go higher, then they'll rally back up, maybe create a flat level here, and then break out to go higher. So on a monthly chart, I mean, that could take the next year. It could take 18 months. It could take a long time, because each candle here represents a month of price action in trading. So right now, 4 months, we've been consolidating right here. That can continue. I don't really have any indication here with a candle of any kind, outside of the fact that we do have a rejection candle right there from 3 months ago. It looks like we're setting up another rejection candle that'll close out here by the end of this week, and we'll see what that looks like. And if we are going to get that little bit of a stutter step here and then maybe a deeper pullback. As we go down to the weekly chart, we can see that right here, if we get a little bit more buying pressure going into the end of the week, more than likely that's going to create a nice small bullish candle right in the buy zone. And we've got all the moving averages aligned. We've got higher highs, higher lows, kind of a little bit of a bull flag here, if you will, a little pullback off the high, setting back up in that buy zone. And the buy zone is identified between the 10-period moving average and the 20-period. And whenever we get a pullback into that zone, we're looking for a bullish candle setting up in that zone. Once that candle closes out, we're looking for a break of the high, and then we can engage the market safely to the upside. We have our stop, we have our entry, profit targets, all defined purely based on the price action. But right now we have the 10, the 20, the 50, the 200 sneaking in there. Everything is aligned. We're all fanning to the upside and making higher highs, higher lows. The only thing we need to be concerned about is with this most recent high, we have a significant lower high, or at least even an equal high here, but slightly lower on both the MACD and the RSI, which tells us there's bearish divergence. So we could make another high, but more than likely would probably put in more bearish divergence. And that signifies that the uptrend here is weakening perhaps. So we might be due for a pullback, which would coincide very nicely with this level here on that Fibonacci retracement. Doesn't mean that the whole uptrend is going to, reverse down and continue lower and break the low. It just means that we might be having a deeper pullback if the market wants to go higher. And the economies here between the U.S. and Europe will support that and sustain that, then we might make a move back up and then eventually break that that level up around basically the 125 level. So it'll be good to see this at the end of the week and see what that candle looks like. And then we also want to move through some of the other charts to take a look at what the range has been, because obviously we've been in this range for quite some time. This is the daily chart, so really since the beginning of the new year, the market's topped out right around that 125 range, and then the bottom here has been really right where we're at right now, right around 122, with just a little peak below that level. So whenever this happens, this is basically a consolidation, and you can see what happens with the indicators. The moving averages, they get all kind of crisscrossed, they're all mixed up, there's no clear direction, there's no succession of higher highs and higher lows like we have in this run right here, but it's basically a straight across consolidation that is either going to break out higher or it's going to break out lower. So right now we need to be concerned about the fact that we're right here at this level around 120, 122. We have a little bit of a bearish candle setting up right here, as we normally do when it gets down at this level, and then it bounces up and it comes probably somewhere back up to the high around 124, 124 and a half. So that certainly could be high probability move of continuing the consolidation. Or if we get a breakout down through this level, more than likely we'll start to see a consolidation of small candles down along this 122 level. And then we'll see potentially, if we get it, a breakdown below that. And then if we do get a breakdown, then we can just look at the whole consolidation from the top to bottom. That would be roughly 125 minus 122. That gives us the total number of pips, and that would take us from 122, a breakout, down to probably 119, which would be basically a 1-to-1 move, and that's kind of how we gauge where these markets are going to run. In other words, the way to think about this is if the market's going to consolidate for the 3 points right here over a period of 4 or 5 months, then when it does break out to the top side or the bottom side, it's at least going to move that width or that distance to the downside or to the upside. So the trick is really to understand where and when that breakout is going to occur, either to the downside or the upside, and then be able to look for those candle structures and that price action structure to help determine when and if that's going to happen. Does that make sense to you guys? So that's kind of what I'm looking at right here. It would be as we move down to the 8-hour chart, since we have a lot of overextension, we've got the moving averages fanning out. That isn't anything new. They were fanning out here as well until the market turned around and rocketed back up and stayed within that range. So the same thing could certainly happen here. Here I would be anticipating, based on some of these rejection candles, it's rejecting that 122 level, could bounce back up in to the zone right here and then roll over. Typically, when price action is going to move out or break out of this consolidation like you see here, there's typically a point that's a midway point, and I have that point identified here right around 123.5 is kind of the midpoint between the high and the low. And usually what'll happen is it'll bounce off 122, it'll make a 50% retracement up here, and then all of a sudden it'll roll over, come back down, set up a flat level here, and then eventually break down to that level. If it moves back up past this level, then more than likely it'll move up towards some of these levels here, hit the top level, and then it could come back down, bounce off of this 123 level and go back up, create the flat level here, and then bounce and break out to the top side. So those are just some of the potential things that I'm looking at whenever we look for breakouts of these kinds of consolidations. So I just wanted to point out there really isn't anything setting up right now. Obviously this setup has been going on for months, but those are just some things to look out for, and those are some key levels. As you can see right here, as we move down, everything is fanned out to the downside. You can see any rallies. I've got some Fibonacci retracements would move us right back up into that 123 level that I was talking about. There's some other price resistance there as well. So just some key levels to watch as we go down to the 60-minute chart. You can see that everything is fanning out. We've been getting those rejection candles, that trend flow trade to the downside, but we've started to put in some bullish divergence right around here, definite bullish divergence with this lower low right here. You can see a nice higher low on the indicators. Actually, it's a trending higher low. There's a higher low here, a higher low here, and same thing on the RSI. So that might give us a little bit of a relief bounce, which has already moved us back into that sweet spot zone, and that's typically where you'll see some selling occur. And obviously we're in the sell zone here on the 60-minute chart as well. So with that kind of divergence, I think we'll probably maybe go up and hit the 62% level, maybe a little bit beyond that, put us into that 122 level, and then if sellers are going to re-enter the market, we might see it at that point. So that's pretty much what the euro dollar looks like. I don't see a huge reversal pattern coming up or anything like that. I just wanted to take a look at the price action, help you guys understand the main thing that I'm seeing, which is really this consolidation right here. And I don't want to necessarily be trading in between the highs and the lows. I want to be able to look and identify where the breakout is going to occur, because that's going to be my biggest, most profitable move if I can get that estimated correctly. So taking a look at the questions here, Zanette's first out of the gate with a question. She's asking, can you explain what the green, red, blue, and the gray lines mean? Yeah, I think so. I think I did that. I'm not sure when your question came in, but the green line, these are all the moving averages. So the green is the 200-day moving average. The red is the 50-day moving average period. Then we have the blue, which is the 20, and then the gray or the black, which is the 10 period. So whenever we have these in alignment, the 50, the 200, the 50, the 20, and the 10, and then we have lower highs and lower lows going in the same direction, then that identifies a solid downtrend. When we have all of these going up, like you see here, we have the 50, the 200, the 50, the 20, and the 10 going up. We have higher highs, higher lows. This is a combination of all the technical factors that represent a good, strong uptrend, and we have the ability then to look for pullbacks into the moving average zone between that 10 and 20 period moving average, and then look for those bullish candles, and that's what we call the trend flow trade strategy. And we'll show that to you and teach you that strategy, all the ins and outs and the technical advantages of that in the advanced strategy education course if you choose to continue and move on to that, okay? So that's all good right there. I'm not going to go to the Nadex binary charts because we don't really have a setup just yet. If we get a setup here on the weekly chart with a nice bullish candle by the end of the week, we'll have another couple of days on that one. Then I would actually go in Sunday night when the contracts come out and then look at the weekly contracts for next week is what I would do. But right now we only have the weekly contracts for this week, and we don't have a candle closeout right here. So I'm really not interested in a pure guess. I really need some price action to work with. So we'll leave that there on the Euro USD. I think you guys understand that. The next market I wanted to look at, we've got a couple of minutes left here. We'll quickly roll through gold, look at a precious metal that typically represents what we'll call a safe haven in times of economic distress or recessions, or sometimes we'll reach a peak in the business cycle, which can represent a peak also in the equities market. And then when markets move from an uptrend to a pullback or a sustained downtrend, then we'll see a rise in different products like gold. And so you can trade these binary contracts on gold with Nadex, which makes it really nice. And just by looking at some of the higher time frames here, the monthly, we've been in a consolidation here as well. We hit a low down here around that 1100 mark. We haven't really been that close before, been kind of balancing around this 1200 level. And we've really created kind of almost a reverse head and shoulders pattern right here. We've got the right shoulder complete, and we're looking basically to break through this level right here. If this level breaks at around 1425 to the top side, then gold could potentially be a real shaker and a mover up to the point, I mean, that could represent almost a move, quite a bit of move up to, maybe almost to the tune of about maybe a couple hundred points, like set the 1700 level, something like that. but that would only occur if the equities market went into kind of a major downward spin. So it's really going to depend on that type of mindset. Are people transitioning out of equities? That means they're selling stocks and they're moving their money into safe havens like gold. Then that would be an exit from the stock market, meaning a lot of sell orders, the market rolling over, kind of going into a nosedive, and then you would see gold then shooting up. So that's a pretty major guess. I'm not saying that's going to happen. We've been in a bull market in equities for quite some time, but I'm just going here and identifying that we've got a little bit of a flat level that's setting up right here around 1370. We don't have all the moving averages lined up. We have the 10 and the 20 getting into alignment, the 50s trying to sneak in there, but we really want the 50, the 20, and the 10 all kind of aligned, fanning out. We want to see some higher highs, higher lows like we have here on the weekly chart, which is good, and really looking for potentially a break of this 1375 level to potentially move back up into this 1427 level. And if we start to get some touches there and a consolidation there and a flat level looking to move higher and break out, then by that time, more than likely, we'll see a lot of these moving averages in alignment. They'll be fanning out to the upside, and we'll be looking for that breakout right around 1425. And then on the reverse play, the S&P 500 would more than likely be declining. There might be geopolitical issues coming out in the news. The stock market might be in a deeper pullback scenario, and that'll cause gold to move to the upside. So there's really a reverse correlation between trading in gold and the equities markets. If you're bearish on equities, then more than likely a bullish gold trade might be in your future. A lot of times I like to see a good continuing fundamental and economic cycle to determine that pullback in equities before I engage in gold. But just looking at the charts right here, it looks like we could move higher from this 1375 number, depending upon, number one, if we can get a bullish candle here, start moving up to that level, and then look for a breakout to that 1425 level is what I'd be looking for. And then looking down through some of the other charts, like the daily, looks very similar to the euro dollar. A lot of consolidation here, really no clear definition of a trend at this point. Moving averages are all mixed up, just like they are here. And so things are really just kind of swinging back and forth between the low of that 1300 level and then the high up around, that 1378 level. So once again, same thought process as we did on the euro dollar. If it's going to break out to the upside, there could be a decent run of almost, almost 60, 70 points to the upside, which would put us at 1360 plus 70, 1440. Or 1430, which would be right around that 1427 breakout level. So that would be the next level of resistance. And then here, if it was going to break down through the bottom side, would be looking down around 1300 minus 70, right around that 1230 level, which would kind of put us probably down somewhere around the low right here. So watching, again, the cycle going back and forth and then looking for those levels where we're going to get some consolidation for the breakout lower or looking for consolidation for the breakout higher, and then evaluating that in relation to the various technical signals that we'll see on the S&P 500. Does that make sense to you guys? So that'd be kind of what what I'm looking at on some of these time frames. No need to really go any lower, I think, than the charts we're on right here. But my best guess right here would be a break up higher at a minimum, at least to that 1427 level. But I'll need to see the breakout of this weekly candle, or the closeout of this weekly candle rather, by the end of this week to see if that's bullish or bearish, and that'll give me a better inkling as to whether we're going to be moving back up to that 1370 level. Good enough? So let's again, there's no setup here, so I won't be going to the Nadex contracts on this one. Really just, I didn't have anything setting up on the charts at this particular time throughout all the markets that I looked at, and so really nothing here to consider. But anyway, Another question here that I'll wrap up real quick. Why is the green line not completed? Sometimes, I'm not sure which one you're speaking of. I've changed charts quite a bit here, but I have all of the lines here. Sometimes these lines are automatically drawn by the charting system. So if the lines aren't completed, that simply means that the price action has more than likely ended at that point. Or if it's off the chart, it may be somewhere down here, and I'm looking at a time frame that doesn't include, the 200, or maybe doesn't include the 50-day moving average, that kind of thing. Okay, so let's take a look then and go back. I got one thing that I want to finish up on. And let's just pop this up real quick. And let me get back to one final slide here to kind of wrap things up. Okay, so let me just wrap up here real quick. We got a few minutes left, and then we're going to do another 30 minutes after this, but this will conclude the recording. And then we'll take some direction from you guys in terms of what charts and markets you want to look at, and we'll look at a few more markets, maybe find some opportunities to look at some Nadex contracts as well. But here, I just wanted to wrap up with the fact that, Nadex is making an investment in your success as an investor. So what we've done is we've put together an advanced education package that is presented by Trade with Precision over several webinars, 3 to be exact, 1 hour each. You don't have to go anywhere. You can watch these from the comfort of your own home. The TWP trading team will be conducting these as live interactive webinars. So you have the ability, just like today, to ask questions about the content, work on trade examples and setups, just like we talked about today, teach you guys all the ins and outs of the trade strategies that I've been using in today's session, and then you can get a better handle on the details of how to deploy and how to use these strategies properly in your own trading. This education package valued well over $900 if you bought it directly from us at Trade with Precision, but Nadex has subsidized the cost for you, so it's a freebie for any Nadex client who has an account. Pretty good deal for you. If you're on this webinar, you don't have to do anything. You'll be receiving an email invitation the next time we're running this advanced education series. So just a couple of different ways for you folks to get in touch with us here at Nadex. Phone and email listed here for any questions that you might have, or you can ask me your questions right now as you've been doing. Just utilize the question box on your screen. Demo accounts also available to give you guys some familiarity with the contracts on the platform and what we've been talking about today. For some current members, if you'd like to begin trading again, take a look at nadex.com. Take advantage of the advanced education webinar as well. It'll potentially take your trading to the next level by giving you 2 trade strategies to work with in your trading. If you are completely new to Nadex and you'd like to set up an account, then just again go to nadex.com, click on the orange box, I believe it's in the top right, it says sign up, fill in your details there, and someone from Nadex will respond via email to get you set up and get you started. Before you sign off, there is a short survey upon your exit. Please let us know your thoughts. And if you're looking to continue on for the next half an hour, stick around. We'll just be wrapping up the recording at this point, but we'll still move on and give you another 30 minutes of market direction and looking at a number of different markets that we'll take a look at, and potentially going to the Nadex platform and looking at some contracts there as well. Okay, so if you're sticking around, stick around. If you're leaving, thanks for joining us. And this will conclude the first half of the webinar today.